You are provided with the following Statement of Comprehensive Income of Prost Limited. Statement of Comprehensive Income as at 31 December 2010, Rand. Revenue, cost of sales, gross profit, other operating expenses, revaluation surplus, purchase of equipment, distribution expenses, ordinary dividends declared, and profit for the year. Upon further investigation, you discovered that included in other operating expenses are interest paid of 780,000 and income tax expense of 4.3 million. You are required to critically evaluate the above-mentioned statement with reference to IAS 1 presentation of financial statements. Great stuff. Take a few moments, jot down a few remarks that you can make on this information that was given to you, and let's see whether you actually got everything. First thing, the name of the entity is missing. Second thing, the name of the statement is not correct either. It's statement of profit or loss and other comprehensive income for the year ended, not as at. The only statement that is as at is the statement of financial position. So that is wrong. Then it's rands, but above the rand, you have to indicate 2010 rand, and here is no comparative figures, so 29 rand should have been indicated there. Revenue, that's fine. Cost of sales is fine. Gross profit is fine. Other operating expenses, well, there's a slight problem because interest paid, which is included in that figure, should be taken out there because finance cost is a separate line item on the statement of incomes, the income statement, sorry. The same thing, income tax expense, you have a separate line item, income tax, where you're going to subtract your income tax from your profit before tax. So therefore, it cannot be included in other operating expenses. Revaluation surplus. Now, revaluation surplus is other comprehensive income, and there should be a separate section in my income statement where other comprehensive income is being listed, and under that heading, other comprehensive income, you should have indicated revaluation surplus. Purchase of equipment. Now, never in your life is purchase of equipment an income statement item. It increases your asset. Therefore, it should be debited against the asset account directly, and it does not have any impact on your income statement. Distribution expenses. Now, we have other operating expenses. We have distribution expenses, but nowhere here do I see administrative expenses. Now, for sure, any entity has administrative expenses. So this thing doesn't look whether it's complete, it looks incomplete because there's an omission of administrative expenses. That could be the one thing. The other thing could be that the admin expenses is probably included in that 19 million rand there, which is also wrong. Selling and distribution expenses we've spoken about. Ordinary dividends declared. Guys, where do we show our dividends? We show our dividends in our statement of changes in equity because it is a distribution to the equity holders of the entity. So dividends declared is not an item that appears in our income statement. It appears in the statement of changes in equity. And then profit for the year obviously would not look exactly like that 14 million looks. Let's see whether we have everything. The heading is incorrect, should be statement of comprehensive income. You can either have only statement of comprehensive income and then your income statement would have had two sections. You would have had profit before tax, taxation, profit after tax, and then other comprehensive income, revaluation surplus, total comprehensive income for the year with a total. The other wording is statement of profit or loss and other comprehensive income. So either one of the two, both would have been marked correctly. IAS 1 requires that finance costs be presented as a separate line item. It was included in other operating expenses. IAS 1 requires that tax expense is a separate line item, also in other operating expenses. Only items of profit or loss and other comprehensive income should be presented on the statement. Dividends declared a distribution to equity holders and should appear in the statement of changes in equity. The purchase of property, plant and equipment is the acquisition of an asset should not appear in the statement. The revaluation surplus is included in profit and loss. It should be presented under other comprehensive income. The statement does not contain a section for other comprehensive income, although there is clearly something that should appear there. IS1 requires presentation of comparative figures, which was submitted. There was no reference to notes. This one we've left out. There is no reference to notes in the financial statements, and the statement does not contain a line item for admin expenses and is therefore probably not complete. And that's it.